Welcome to this month's review of the True Potential portfolios. My name is Julius Polokas and I'm an investment analyst here at True Potential. The format for today is that I'm going to spend the next few minutes talking about our flagship investment product, the True Potential portfolio range. First, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes we are seeing from our fund manager partners, and finally discuss what changes have been made over the month. Looking at the month of January, in general, the portfolios have seen a positive start to the year at the higher risk end, with the equity markets performing well, especially more developing areas. As we look further out, the longer-term numbers are excellent, illustrating advanced diversification working. Moving on to performance of the underlying funds that make up the portfolios, the new True Potential Goldman Sachs Balanced Fund, launched in December, performed well, with the fund offering excellent diversification, particularly against bond markets which struggled over the month. The True Potential UBS fund range also produced good numbers, with the fund range's ability to access returns. Looking at the key themes which are formulated after speaking to our 8 fund manager partners, our managers have continued to remain positive on the economic outlook. With all major economies of the world enjoying a period of synchronized growth, a very clear consensus of opinion is evident across our fund manager partners. Rising interest rates in the US and UK, along with indications of monetary policy tightening and the possible beginning of an end of quantitative easing in Europe and Japan, have prompted a move away from fixed interest securities. There is now a clear preference for equities. Bond portfolios are generally concentrated in short-dated maturities to insulate them from the effects of rising interest rates. We are also seeing an increase in the use of alternatives, structured products, long-short hedging strategies, and absolute return funds in place of traditional bonds. Looking at the changes made over the month, these have taken place within Balanced and Balanced Plus portfolios. Within Balanced, we have reduced the styles of Allianz, SEI, and UBS. Between them, the True Potential Allianz and SEI funds have the largest exposure to non-sterling currencies out of the True Potential Balanced fund range, a negative should we see a sterling strengthen further. These two funds also have the longest fixed income duration, and so are likely to be most sensitive to rises in interest rates both in US and UK. In addition, the True Potential SEI and UBS Balanced funds both have more limited range of alternative investment strategies to call on as we enter a difficult environment for the bond market. By contrast, we have increased the weighting to the True Potential Goldman Sachs Balanced Fund. This fund has one of the shortest fixed income durations out of the balanced funds, and the range of alternatives it can use to provide returns that are uncorrelated to both equity and bond markets. Within Balanced Plus, we have reduced the weighting of the True Potential SEI Cautious Fund. This is to diversify away from the large exposure to one particular fund manager's style, as well to minimize duration and foreign exchange risk. We have increased the weighting of the True Potential 7AM Aggressive and the True Potential SEI Defensive funds. 7AM has a large allocation towards emerging markets, European and Japanese equities, which are all the areas that fund managers have been positive around. SEI Defensive has been increased to maintain the portfolio within the balanced risk band. For the rest of the portfolios, no changes have been made, with the 4 optimization factors of risk, cost, expected return, and risk-adjusted return always being paramount. In conclusion, the first month of 2018 has started relatively well for most of equity markets and continued the strong returns we have seen in 2017, despite sterling value strengthening. Risks are evident for investors, but the key to mitigate these risks is diversification, something we do by country, asset class, currency, and even fund manager styles within our True Potential portfolio range. Thank you very much for listening today, and I will speak to you next time.